Ladies and gentlemen, China is covering up one of the biggest financial crises since Leeman. In today's video, I'm going to be exposing exactly what China is doing to cover up their huge housing market crash and to also expose how they're covering up their weakening economy. Because people, as you know, I've been covering extensively on the channel the Evergrand crisis, what's going on with China's housing market, and up until recently, there's been huge amounts of data which has been pointing to the fact that a huge crash is coming. But the last month or two since the Winter Olympics, there has been a huge data blackout, and China has gone silent on the issue right as a real crisis is about to begin. So everyone, we got a lot to get into and a lot to cover, so let's not waste any time. Let's get straight into it. Okay, so first things first, for those that don't know, recently there was a huge developer, Evergrand, which was in $300 billion of debt, which has officially defaulted. And this has caused contagion throughout the whole property developer industry in China. And again, for also those that don't know, China's housing market at its peak was worth $62 trillion, absolutely dwarfing the amount the housing market was worth in the US during the 2008 financial subprime mortgage crisis. And I think we all know that China and the Chinese, they love their real estate and they plow more money in real estate than any other asset, with the real estate sector adding up to 29% of China's GDP. And remember, China is the second biggest economy in the world with a GDP of $14 trillion. So if China goes down, or how the saying goes, if China sneezes, the rest of the world catches a cold. And China has been a massive contributor to economic growth over the past 10 years. And towards the end of 2021 in December, we're getting huge amount of economic data that was telling us that defaults were at record levels in China. We're also getting news after news of every single week another developer was defaulting and another developer was going bankrupt. We was finally starting to get the data that proved that house prices were beginning to fall in China and the trend was starting to accelerate. But as 2022 came around and as the Winter Olympics came, there has recently been a media blackout and also a data blackout on the real issue that's going on in China right now. And this is what I've been warning about everyone. I've been saying when the real crisis begins with China, unlike the US, they could just simply stop publishing data. And we've got proof now that this may be what they're doing. And in China, it wasn't just the housing market that Xi was cracking down on. He was cracking down on everything. And we also saw a huge crackdown in the stock market, specifically with what's going on with the tech sector. There has been trillions and trillions of dollars of valuations wiped out from these tech giants in China. And what was really unfortunate, there was a lot of these famous investors like Ray Dalio and Charlie Munger telling investors to pile into China right at the peak before we saw stocks like Alibaba plunge more than 50%. But I do have some news and do have some data to show you that it's not over yet. Look at this, everyone. China's new crackdown shows 1.5 trillion tech rout is not over yet. And people keep asking me, okay, well, where's the crash you've been talking about for so long? People, it is already here. Wake up and look at this. China's tech gauge in Hong Kong and the US have halved from their peak. So they're down 50%. It's already crashed, people. Investors are looking at opportunities in the beaten down stocks. And for me, I don't care, how low they go. I'm not putting my money in. I definitely don't trust my money in these Chinese tech companies. And I'll bring up a chart here, everyone. Look, they're telling you buy the dip, buy the dip. But this company, Meituan, fell more than 15% after China asked a food platform to cut their fees. We have to have a look at what's happening now with Evergrand and what's happening with the auditors. This is happening, everyone. Evergrand crisis. Auditors' resignations trigger alarm bells amid hidden debt at Chinese property developers. So PwC resigned from Hobson after being asked to explain about its auditing on China Evergrand, while Deloitte departed from China Yuan. So this is exactly what I've been talking about, everyone. The auditors are hiding huge amounts of shadow debt at the Chinese property companies. The books are rotten to the core. They're absolutely cooking the books, and now they're trying to cover it up. And Chinese companies are due to report their December year-end results in April, and changes may cause delays. People, it is very obvious the situation these developers are in, and they're continuing trying to delay it. They don't want to alarm their investors, and they want to cash out on every penny they can before it all collapses. And have a look at what the courts are doing now. China court freezes 157 million of Evergrande assets over missed construction payments. And this is something else I've also been talking about. I've been saying how Evergrande employs a huge amount of people in China. The construction industry makes up a huge amount of the commodity boom that we've been seeing recently over the past 10 years. So if China construction slows down, we're going to see their whole economy slow down, and then this will also lead to a global slowdown, especially us here in Australia, where we've been selling a lot of our resources to fuel this construction boom. We're definitely going to feel this. But people, it is not just Evergrand. The contagion is spreading to every single developer in China. Look what's happening with other developers now. Look at this. Times China downgraded Shimao Eyes extension and Evergrand update. So Shimao Group Holdings Ltd is seeking an extension repayment on about 9 billion yuan. That's about 947 million US of high yielded trust products over 3 years, people familiar with the matter said. This is a reminder of the troubled Chinese property industry mounting stress, which the firm appeared to have largely skirted until recent months. And so what this is causing is it's causing the bond market in China to collapse. This is causing yields to spike. There's no way these developers and these companies can afford to pay these yields of 20%. So this is going to cause a train reaction of more and more defaults. Shimao's dollar bonds fell further on Thursday with both its 4.75% note and 6.12% debt dropping for a fourth straight session. And I bring up a chart here. This is what's happening with the bonds market in China right now. Sell first, ask questions later. So Shenro's a perpetual dollar bond tumbles amid concern it may not be redeemed. So you can see it's fallen from around 100 cents on the dollar here to 20 cents on the dollar. So when a bond falls that low, that is pricing in default and that investors pretty much aren't going to get their money back. And so this is now causing the banks and the central bank in China to panic. They're now starting to ease. They're starting to now pump more money into the banking sector. They have started to lower interest rates a little bit because, like I said, their whole economy relies on the real estate sector. And if you're wondering what this is going to mean for global real estate prices, this could have an effect. Look, banks boost lending, and the slump has now spread to London because Chinese companies haven't just been doing developments in China, they've been doing developments all around the world. And we're now starting to see some development sites have been absolutely deserted, and we're going to see other developments in other countries like London, maybe even Australia, fall through. So listen to this. A Bloomberg intelligence gauge of developers fell 1.7%, adding to the biggest drop in 5 months a day earlier. So I'll bring up a chart here. The end of the party, China's spending on UK real estate dries up. So we can see here the peak was around 2017 when Chinese were really piling into UK real estate. And this was pretty much true everywhere around the world. We can see now it has fallen to an all-time low in 2021. And I think it's going to fall even lower in 2022. But I know what you're thinking, okay, what's my point and what does all this mean in simple terms? What this means is this risk, this issue that's happening in China right now, they're trying to cover it up. The media has had a blackout on it. Maybe China has asked the media not to report on it. There's been a blackout on data. But people, like I've been warning about, this could very well be China's Leeman moment. And with already so many other risks going on right now, like the Federal Reserve going to lift interest rates, the Russia-Ukraine issue, surging inflation, if we get a collapse in China's economy and a collapse in China's real estate market, this is just going to add more fuel to the fire of this global recession that may be coming very soon. I think it's going to take for something to break in China's financial system for us to know how bad things really are. Because like I said, again, they're not going to tell us until it is too late. Right now, I think we're going to see more and more developers hit by surging inflation, by surging commodity prices, and by the big labor shortages that are going on right now. Because what normally happens with developments is many buyers may agree to a price a year or even 2 years before the apartment is built. So if they agree on a price and then all of a sudden supply costs go up 50%, well then that means all these developers' profit margins could all of a sudden be underwater. And a lot of these apartments that are being developed in many major cities around the world, not many locals are buying them. A lot of international investors, especially Chinese, have been buying them. So if they stop buying them, then this could add more downward pressure to real estate prices right when interest rates are about to start going up, which already has a weakening effect on real estate because when interest rates go up 1%, house prices can fall all the way up to 10%. So people, we definitely have to keep our eye on what's going on with China right now. We can't take our eye off what's happening, even though if the media stops reporting on it, even though if we get a blackout on economic data, I don't think this risk is going away. But everyone, that's just my thoughts and opinions on the situation. We're a community here. So what do you think about this? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like button and subscribe. I haven't been saying that in my videos, but apparently I should be. So go ahead and do that if you can. If you're interested, you can get up to 5 free stocks with Moomoo when you deposit $100. I'll put a link in the description. Thanks for watching. I'll see you in the next video.